so much on it.
Right. Well, I mean, it's almost sort of a Shakespearean story inside of Nissan, which we haven't, frankly, gotten to the bottom of yet, but there does seem to have been a lot of power struggles, and there had been some building resentment, I think, on two fronts. One was Mr. Ghosn, there was a lot of power that was concentrated in him. He was at one point chairman and chief executive of Nissan and Renault and Mitsubishi. He stepped down from being chairman of Nissan in 2017, but he still had a lot of power. The other area where at Nissan there was concern was there seemed to be this fear that even though there was this solid alliance between Renault and Nissan and Mitsubishi, the Japanese side was fearing closer collaboration and resenting a little bit closer collaboration with the French side, partly because they felt that they were the stronger brand, they had stronger engineering and technology, and they felt they were unfairly having to share it with their French colleagues.
So what happens now? Phil was just saying that the head of Nissan is set to be meeting with the head of Renault, who's on his way, I guess, to Japan to meet with him.
Right.
What happens now with this alliance?
Well, I think there is an effort. I mean, in this past 3 months, I think that was a recognition on both sides that relations have deteriorated between Nissan and Renault. I think at the beginning, Renault was completely shocked at the arrest of Carlos Ghosn and the investigation that they had not heard about previously. So I think they're trying to learn more about it. And I think with the appointment of a new CEO at Renault, who can now talk to the current CEO of Nissan, I think there's a hope of reviving relations and trying to calm the waters a little bit. But of course, Mr. Ghosn is still in detention, and as you said, we're not quite sure when the trial will be. He is definitely going to be in jail for about another month, and then at that point, the court can either approve or release him, and of course his lawyers can also reapply for bail.
I would sit down with anybody that wants to close more loopholes, because there were no more loopholes closed inside a tax bill than the one we just produced. But the one thing, you sit back and ask this question, it took us 30 years to get to the last tax bill we just did. So the concept that we're going to sit down and write a new tax bill this year, I think it's very difficult to make that happen.
That was House Minority Leader just moments ago, Kevin McCarthy, speaking about the possibility or lack thereof of closing tax loopholes in this larger conversation about taxes that seems to be taking place across the country. Our guest now joining us, former Treasury Secretary Jack Lew. Before we hit taxes, I just want to get your sense of the government shutdown and what you think may or may not happen here, given that it looks like we have a deal of some sort.
Well, certainly the news this morning suggests that Congress has a deal. I certainly hope if Congress has a deal, the president doesn't choose to shut the government down again. It didn't work out so well the last time. It's never worked out well. It's irresponsible. And if Congress has a deal and it's a fair deal, the president should sign it.
On the tax front, you know, we've been talking a lot about what feels like a lurch to the left by the Democratic Party, whether it's Elizabeth Warren's broader wealth tax, whether it's AOC's 70% tax, Bernie Sanders' 77% state tax, Marco Rubio commenting this morning, he's on the other side of this, but on buybacks, not so far away, by the way, from where Schumer and Bernie Sanders were a week ago on buybacks. What do you think's happening here?
Look, I think there is something happening here, and it's reflected in the broad unhappiness with the tax bill that was enacted just under 2 years ago. It's not done great things for the economy. It hasn't unleashed big investment. It hasn't produced great jobs for people. And it has produced things like buybacks. Now, it's not a big surprise to me. I think I sat here on this show and predicted that that would be what happened if you cut the capital gains rate as much as they did. The problem we have in the country is that we have growing income inequality. We have a fear that opportunity in the future is not going to be there for people to get into and stay in the middle class. And we have policies that aren't dealing with it.
Just to go back on a point, you're saying that you think it was unleashed by the tax changes of last year. I mean, I look at this as something that was unleashed by the Great Recession of over a decade ago.
That's a fair point.
And median housing income dropping pretty drastically. I look at this as more than a decade.
I agree with that, Becky, and I actually think if you look at the continuum, coming out of the financial crisis, the right government response would have been to do something to address the underlying problems of inequality. What we had was a policy that doubled down on inequality.
You mean by the Fed lowering rates and really
no,
creating equity?
Look, I think that there's no question that low rates led to higher asset values, but it also helped to end the recession and avoid a depression.
Square this
and that created a lot of jobs.
Square this one piece of it. We are, and President Trump talked about it during the State of the Union, you look at the jobs numbers on a monthly basis, and you have to be awed, frankly.
Or take GDP.
I think it's hard not to be.
Unless 50% better than what you were able to do.
I'm trying to help you, Joseph.
I know. But
so the question is, given where we are in the economy,
is it a lag effect for Cash for Clunkers? You guys did this?
I'm going to surprise you, Joe. When you throw a huge amount of stimulus on a growing economy, it should be no surprise that you get some short-term bump in
what happened?
GDP.
You threw $800 billion at it, nothing happened.
And we didn't have a depression. We ended a recession, and we started a recovery that hasn't ended yet. It's the longest recovery in history.
You really are going to look at GDP. I mean, you never had a year of 3%. It probably is going to be 3%. You don't think any of this is from deregulation and from tax reform? Do you think this is a delayed effect of your policies in the Obama administration? Look, can you really say that to me?
I do believe we left an economy that was strong, and the continued strength of that economy is something that could have been predicted. I actually think the risks in this economy for the moment are self-inflicted. I mean, just listen to the things you're talking about.
No, I know.
Confidence in the economy because of government shutdowns. Confidence in the economy because of a war with China. Confidence in the economy because...
You saw a 16-year high on consumer, on their feelings about the future. You saw that yesterday, right? How positive they are about their economic future?
Did I mishear you this morning saying that the market is up because the government looks like it's not going to shut down?
No, I
It
know,
turns out
but
those
just
things
purely
actually
in
affect
the most recent
sentiment.
polls that people feeling very good about their financial future right now. Much better than they did during the Obama
Look, I
years.
think what you're seeing in the United States, in Europe, and a lot of parts of the world is that people are worried about the future, and it's reflected in questioning institutions, questioning democratic processes, questioning free markets. I believe in democracy, and I believe in the free market.
Do you believe in the
We
Green New,
don't.
do you believe in the Green New Deal?
So I think that the combination of things from the Green New Deal to some of the tax
you think
proposals
that
that are
you
out
would sign
there.
on for that?
Let me speak for myself, Jim.
Okay.
I think that there's an important debate going on right now, which in my view ought to be about how do we have a fair system, how do we have a system that addresses the needs of the country, things like infrastructure, apprenticeship, childcare,
Right.
and how do we do it in a way that's fiscally responsible? Now, I don't know whether any one of these proposals will answer all of those questions. I'm glad people are asking, though.
Mr. Secretary,
So you might be okay with the Green. You were
Look,
Treasury Secretary. Do you think that is a viable option for the U.S. economy?
It is not a plan that I can speak to the merits of one way or the other. It's an idea.
Really?
What was issued this week is not a full plan.
Well, there
It's
are
an
some
idea.
ideas in there
Yeah.
that
So I think that
you
do we
can't
have a
reject it out of hand
do we
as a
have a
president.
problem in this country that we have a real issue with environmental problems? Yes.
You know
Do we
some
have a
of it.
problem that the tax system is not fair? Yes. I'm going to look and see what the solution is. But I told you what the test I would
on
use.
buybacks specifically, because there was a headline earlier this morning we talked a lot about with Marco Rubio putting out a plan effectively to tax buybacks the way dividends are taxed. The idea being that effectively his argument that buybacks are incentivized over dividends, which arguably is true given the way the system works. I'm not sure how you would execute that tax, but if I put you back in the chair of being the Treasury Secretary, is that something that you think would be a net benefit economically to the country?
Look, buybacks are not in and of themselves good or bad. They can be overdone, and you can have policies that create incentives to overdo them. I think right now we're in a situation where the policy environment is encouraging bad outcomes. You know, when I was secretary, we saw that with inversions. I tried to deal with it on inversions. I don't think the tax code, I don't think government should tell businesses exactly how to do their
But the
business.
question is-
but we shouldn't make it attractive to do things that we think are
but
wrong.
here's the great conundrum. Today, it's not so clear to me that if the money wasn't going back into a buyback, that somehow we would automatically go into some kind of capital expenditure or would automatically go into staffing. You're only hiring the next person when you think that there's going to be more demand than you currently can handle. You're only going to build the next factory when you think that whatever your current factory has is working flat out. And so the question is, what happens to that money?
The gap between the capital gains rate and the earned income rate is really what's at issue with the difference between dividends and buybacks. I didn't think it was a good idea to go to 21%. I didn't think anyone, when I was secretary, was asking to go to 21. We went below the rate that was seen as the goal, 25. It cost a boatload of money we don't have. And now we're seeing things that come out of that differential that are bad practices. So we need to go back to the drawing board and ask some basic questions. It's rare that I start out saying that Marco Rubio's idea is something I want to take a look at. So that ought to get people's attention just in and of itself. You know, if you look at the system, one of the problems we have is not just buybacks in the short term. Over the long term, the capital gains of very wealthy people often are never taxed. Never taxed. About half of the capital gains of estates over $10 million are never taxed. That's not fair.
So but how do you capture that money?
So look, when I was secretary, we proposed something called stepped-up basis to try and stop the practice
On the estate level.
On the estate level.
Yep.
There are other ways to do it. The workability is an issue. When I look at these proposals, one of the questions I ask, as you asked me on this dividend issue, is can it be done in a workable way? Serious people should be looking at that. I'm glad they are in a lot of these areas.
Okay, we got to go, but what would it take in terms of money for the IRS to do any of this stuff? Because we have all these conversations about what should happen, but we have an IRS that is so underfunded that it almost
That's a
doesn't
good
matter.
point. The probability of having the IRS catch things is going down and down because we have a war on the IRS. It doesn't take huge amounts of money. It's hundreds of millions, not billions of dollars.
Former Treasury Secretary Jack Lew, thank you, sir.
Good to be with
Nice
you.
see Appreciate it.
You really didn't answer me about the Green New Deal, Mr. Secretary. And just saying that you're for a clean environment, but I'm not sure of the actual detail. I know you know some of the details of the Green New Deal.
Now, actually,
Do you think that every single person should be guaranteed a family-sustaining wage, free, medical leave, paid vacations, retirement security, and even if you're unwilling to work, you should get a...
I'm not going to sign on to anything until I know all the details. I think there are a lot of
have
issues.
already signed on. Some of the leading
you asked me,
Democrats have signed on.
do I think that there are problems that we need to address, whether that's the...
Punting again.
No, I'm not punting,
I
Joe.
understand that we wanted an environment, but we're talking about no air travel in like 10 years. What will happen to global trade? This is what your party has in a platform.
You know, I think that there's a desire to describe what Democrats are doing in a way that is not exactly accurate.
It's a problem with the description, not the actual
It's fair that
policy.
there are certain Democrats that are creating straw men for people on the other side.
There's no doubt that there are some straw men out there, but I think
These
people
are
are
real
asking the
people.
right questions.
Kamala Harris is not a straw man.
People are asking the right
Elizabeth
questions.
Warren is not a straw woman. Kamala Harris is not a straw woman. Cory
hope,
Booker,
I hope
Amy
the debate that
Klobuchar.
we have on the substance gets to what are the right tax policies, what are the public investments we need to make, and what is a fiscally sustainable future. That's what we ought to be having. We didn't have that debate on this tax.
I'm trying to help your party. I really am at this point, Mr. Secretary. Anyway, thank you. We got to get the thanks coming in and being on set with us. Let's get down to the New York Stock Exchange. Jim Cramer joins us now. So what's the government deal? Averting a shutdown, it's worth about 200, do you think, Jim? Or if it actually gets...
You know, look, I care about China, Joe. I think that this was something that People worried about that it might be a shutdown over the weekend. They get a deal, good, move on. But my focus is on China until we get some more earnings. And it's not as much on tax policy. I'm more concerned about spend policy. I wish there was someone down there who cared more about spend policy because you can raise the capital gains tax, and I get that. And you can tax the rich, and I get that. But Joe, you and I both know that it's the spend. And the spend's insane.
That's my problem, Jim. I can actually see some. I mean, I'd like to do all the things to try to raise people up, and I'm not sure that we know. We've tried. I'm not sure we know how to do that. One way to do it is faster economic growth. I'm pretty sure of that, and I know the wage gains have been slow and hard to come by, but I think it's finally starting to happen, and I think this is the one way we can do it. We're stuck with this.
Yeah, we have to grow the economy. We got to keep people to work, and we got to get the healthcare costs under control. And I think that no one's addressing the latter because that's what's just uncontrollable. You can't do anything as long as that's out of control. And do you hear anyone ever talk about it anymore? I mean, other than drug prices, that's not really the issue. We know there's just a lot of structural problems in healthcare. So grow the economy and figure out healthcare, and I think we get the win.
Okay, Jim.
David
Thanks.
Faber,
We'll
the
see
New
you
York
in
Stock
a minute.
Exchange. The Dow looks to avoid a fifth day down today, something it has not suffered since June, getting some help from reports that a tentative deal has been reached on border security. Europe's green pretty much across the board, oil up 2%, those OPEC production cuts reportedly sticking, and Powell speaks in the noon hour Eastern time. Our roadmap begins with a deal reached tentatively. Lawmakers compromised to avoid another shutdown as stocks rally on that news, but will the president sign it?
Shares of Under Armour on the rise this morning after reporting better than expected earnings. We're going to break down those numbers. Also find out why North America is still a weak spot.
And shares of Apple are up today after 3 days down. Coming up, Tim Cook's new comments about lower-priced phones in China. First up, those stocks are pointing to a higher open on Wall Street. Congressional negotiators say they have reached a tentative deal to fund the government and avoid another shutdown. A source tells CNBC the deal includes about $1.4 billion for physical barriers at the border, not the $5.7 billion that the president was looking for. The bill could be introduced as soon as today or tomorrow. It is unclear if the president will sign it if it passes in Congress. We'll see. I mean, less than a quarter of what he originally was asking for.
Right, I'm waiting for him. The last tweet he has is about it was 45 degrees outside, and this was the overflow crowd. I'm waiting. I think that this rally could dissipate if he tweets it's not enough and talks about crying Chuck, right?
Crying Chuck.
Yeah, he does one tweet, and this guy sends this whole market down. So let's be careful if you're taking.
Although
Apple
you've been saying it's more about China than the shutdown. Though,
No, I know,
so-
but you could take this gain away with a tweet. No, China's really everything to me.
I mean, the market went up during the last shutdown, obviously.
Yes. The shutdown is it's of moderate importance versus the leaks by the. But we now have leaks by the Mnuchin team saying that the Lighthouser team is a little more on board than the Mnuchin. I mean, all these. I don't trust a single story about this thing.
It's a lot of cross currents on China trade. There's speculation that the deadline could be delayed. Malpass has told reporters that in fact it will not. And reports of whether they could ostensibly meet in Florida. Could they meet somewhere in Asia?
Well,
it's a mess.
I read the story today in the front page of the Journal about how weak China is. I see this bulk freight numbers are really bad. And you're seeing a lot of order cancellation. I had Brian Goldner on last night from Hasbro, and he said that if he could logistically get the toys to come out of another country, it's a lot of the problem is it's not that they make them great, or of course you want to save toys, but it's just how easy it is to get out of China because it's long been established how to get. But you solve the logistics problems from some other countries, China is just going to have a gigantic problem.
How about this op-ed, Bloomberg op-ed by Kyle Bass? When it comes to trade talks, the president and his negotiators have more leverage than any U.S. administration has ever had. And they say that leverage gets even more powerful once we pass March 1.
I think that I just think it's happening, and whatever they do seems meager. For instance, 2 weeks ago, they let S&P Global in to rate Chinese bonds. And it was kind of a big breakthrough. Doug Peterson on last night, and he was just talking about, well, this was great for us. I said, well, did it have anything to do? Was it a give? Was it a give by the Chinese? Like, he said, no, well, not really. I mean, I find the Chinese are in trouble in the sense that they don't even know how to signal that maybe they would like to be a little more compliant. And we have seen, I was with the Nigerians yesterday on Scott's show, and they were talking about how, there's just a lot of people saying that she's in more trouble than we think, the president for life. I come back and say, look, what matters is they don't want to have a declining PMI. And they want to get auto sales up, and they've got to get industrial sales up. And it's just a problem right now. They don't have strong growth.
I don't think there's a great deal of transparency about Xi's standing or anything else. No, I don't.
You don't have a direct line?
No, I don't have a direct line, and we all try to speak to people we think are well informed, but it's